welcome everyone to this week's weekly market recap for the week ending Wednesday, September 17th, 2025. I'm Tom Bowley, Chief Market Strategist at EarningsBeats.com. It's a pleasure to be with all of you again this week. I am safely back in South Carolina now after a trip last week out to the StockCharts.com offices in Redmond, Washington. Had a great trip, saw a lot of great friends. Had some meetings, good meetings, and now back in the saddle here in South Carolina. As far as the market goes, a big Fed meeting today. Not only did we get a rate cut, finally, let's give Fed Chief Powell a little golf clap. Got that rate cut, 25 basis points, and the Fed did indicate that they're looking to cut rates 2 more times in 2025. So I think that was the thing that folks were waiting on to see whether or not they were going to commit to potentially cutting rates again further in 2025, or whether it was going to be more of a wait and see attitude. The Fed pretty much said, hey, we're looking to cut rates 2 more times. So the initial move was, as you might expect, we saw a lot of interest rate sensitive areas popping pretty big time in the first 5-10 minutes after the announcement. But from there, it was really a lot of back and forth with more selling than buying. So I talked about the possibility that maybe we were going to see a buy on rumor, sell on news type of a situation. I think, honestly, that's really what we got today. We did get a little bit of a pop. I think, again, the fact that the Fed announced that they are looking to continue to cut rates further in 2025, I think that was a really good thing for the market. That is good news. That is a really positive takeaway from this Fed meeting today. I think that will certainly benefit the bulls over the balance of 2025. But as traders, we're looking at the here and now, and the market had anticipated this. We saw the market move up in anticipation of it. And so we got to be a little leery in the second half of September. Historically, this is not a great time. We do have options expiring this week with a lot of companies with in-the-money call premium, a lot of in-the-money call premium. And so sometimes that can be incentive for market makers to keep prices or to move prices lower. So it's not like we're issue free here. We still got some issues, but the really big news, that Fed cut, I think will play out bullishly into year end and into 2026. But in the short term, we may still have some issues. With that, let's take a look at what happened today and over the course of the last week. So here are the major indices. You can see the Nasdaq leading the action over the course of the last week, gaining 1.5%. Russell 2000 up 1 1/3%. The Dow and the S&P 500 both able to gain a little bit more than 1%. However, the S&P 400 mid-cap index flat, and transportation stocks continue to lag, even with that news today of a rate cut and further rate cuts to come. Transportation, 6th out of those 6 indices. Not exactly great action there. Still waiting to get some further bullishness out of transports, but we'll have to just wait until we see a little bit more down the road, hopefully. Moving over to the sectors, the consumer discretionary group leading for the last week, gaining a roughly 3 3/4%. Communication services gaining almost 3 3/4 as well. Financial stocks gaining 1 3/4%. Those were your 3 sectors that outperformed the S&P 500. The other 8 were underperformers. The most notable being technology. Technology only gaining less than half of what the S&P 500 gained last week. And that kind of keeps a lid on the gains, because technology is roughly 1/3 of the S&P 500. And when that underperforms the entire S&P 500, it makes it very difficult for the overall index to move up appreciably higher. So we got a little bit of underperformance in technology over the course of the last week. And you can see down toward the bottom, 3 groups actually lost ground over the course of the last week. And as a reminder, when I'm looking at a 1 week, 1 week performance, I'm looking from last Wednesday's close to this Wednesday's close. A lot of times when we're looking at weekly performance, we're looking at Friday to Friday. I just want to point out this is from Wednesday's close of last week until today's Wednesday's September 17th close. So healthcare, industrials, utilities, both or all 3 finishing in red territory for the last week. All right, let's take a look at some of these charts. S&P 500. Now, in red, you will see some annualized returns that I want to highlight and pass along. What I've been telling our members at EarningsBeats is the first half of September tends to be pretty good. You know, September has this reputation of being a really poor month, and it is. It's the only month of the year that's actually gone down more than it's gone up over the course of the last 75 years. However, the first half of September does tend to perform pretty well. And you can see September 1st to the 16th over the last 75 years, the S&P 500 has an annualized return of positive 7.97%. And when you consider that the average annual return on the S&P 500 over 75 years has been roughly 9%, the first half of September, at least through the 16th, the annualized return is almost equal to what we normally have throughout the year. So it's not that big a deal. However, check out September 17th to the 30th. Today is September 17th. So we are starting this more bearish part of September, which is why I was a little concerned about the possibility of buy on rumor, sell on news. And we got a little bit of that today, and I'll talk about that some more as we go through these charts. But from the 17th to the 30th, the annualized return is minus 25.63%, which is pretty significant. Over on the right side of the chart, the really bearish part of the second half of September is from the 20th to the 26th. So the 20th is Saturday. So next week, the 22nd to the 26th, this is the second worst week of the year historically, dating back to 1950. 20th to the 26th of September produces an annualized return of minus 43.09%. So again, not really looking forward to a lot of great historical action. The tendencies are for the market to struggle from now through the end of September, but especially next week. So just keep all of this in mind. I wouldn't, even though we got the rate cut, we're looking at more rate cuts ahead, the opportunities will come, in my opinion, mostly in the fourth quarter and into 2026. I would be really careful here over the next couple weeks. If we get breakouts, you see individual stocks worth trading, I would do that, but just make sure you keep stops in play, because the next couple weeks can be, maybe, well, some years worse than others, but they can be a little bit rough. So we'll see how this plays out over the next couple weeks. Nasdaq 100, we did weaken during the day and then rallied back. All the action staying above the rising 20-day moving average. So technically, not really a whole lot of damage today, but I want to show you an intraday chart of the NDX and look at what happened after 2 o'clock. So in the morning, we were down. We started to rally back going into the announcement. We got the announcement. We had an initial pop, went almost positive on the QQQ, or on the Nasdaq 100. And then we saw over the course of about the next 50 minutes, a lot of selling. From there, we got another big rally over over the next 30 minutes. And then it was about 3:30 Eastern going into the close. You can see we rolled over. It started to weaken again and ended up finishing down for the day on the Nasdaq, down on the day for the S&P 500. But the Russell 2000 small cap did actually finish higher for the day. So looking at the IWM, you can see IWM gaining 0.26%. We finished at 238.89. But big problem with this chart is after the announcement, let me show you what happened to the IWM right after the announcement. We exploded to the upside. We went from literally 240.5, which was right at about breakout level on the IWM, and we scorched higher. It was literally just jump after jump after jump. Initially, we got up over 244, way into breakout territory and getting really close. Remember, I had said the IWM had a measurement. This was all the way back in June when the IWM was testing its 20-day moving average at 207. And remember, I said back then that the target on a bottoming reverse head and shoulder pattern, actually the target, the measurement on the Russell 2000, the IWM, was up to about 248, 249. we went over 244. We're getting close to that target. But after that initial move to the upside, you can see significant selling. We went from above 244 down to 237 in less than an hour. That is $7 or nearly 3% in less than an hour. So there was a lot of selling on the news. And then we rallied back, but we were not able to make that breakout. So again, if we look at this chart, you'll see a long tail to the top where we had broken out above the highs that we had back in November of last year, but we didn't sustain it. We came back in and we failed to hold that breakout level. Now, anything can happen, but I would say based on that candlestick, the odds are that we probably are going to be looking at lower prices in the near term as opposed to higher prices. And given the fact that it's option expiration week, and we did just start this more bearish second half of September, that kind of lines up the technical developments today, line up with what we might expect during option expiration week and the second half of September. Now, a couple things to mention as far as intermarket relationships. So here is the IWF versus the IWD. This is a 5-day chart. So over here on the right side, this area right over here gives you today's action. And you can see large cap growth, IWF, was underperforming large cap value most of the morning into the afternoon session. Right after the announcement came out with the Fed cutting, we actually initially saw growth take a hit relative to value, make a reversal over the course of the next hour, hour and 15 minutes, and then into the close, we started to weaken again. So this kind of lines up with that buy on rumor, sell on news kind of theory, and also with options expiring this week. You know, we made a recovery, but we didn't quite get all the way back. Then we started to roll over into the close. Not exactly a great look. It was nice to see that recovery, but the way we finished does leave a little to be desired. I wanted to talk a little bit about the various industry groups. So what I keep is a chart list at StockCharts with all of the industry groups on it so that I can literally just pull up for the day and get a quick synopsis on what was leading today. Now, I think this is important because we did get not only the rate cut, but essentially a promise from the Fed that they're going to be cutting again next couple of meetings through the end of 2025. So I wanted to, go through some of these groups that performed well today to get a sense of what could be, more the norm as we go forward into the fourth quarter. So in particular, consumer finance, which had a really good day today. I'm going to look at that. I want to look at airlines, which also had a strong day, and banks. All three of these were relative leaders today with the rate cut and with the announcement of future rate cuts. And I think all three of these are really interesting on their charts right now, and also from a seasonal perspective. So let's start with consumer finance. Consumer finance, again, big day today, gaining 1.78% and nearly making a breakout up above that 810 level. That's what I'd be looking for out of this group. Now, if it makes that breakout, the thing to keep in mind here is the consumer finance group relative to the S&P 500 over the last 13 years on a seasonal basis. Notice September consumer finance outperforms the S&P 500 46% of September's over the last 13 years. The odds of that of consumer finance outperforming goes up to 58% in October, 67 in November, and 75 in December. So this is a group that tends to show more and more strength as we move toward year end. Down at the bottom here, we have average outperformance over the same 13-year period. September consumer finance averages outperforming the S&P 500 by 0.2%. October 0.4, November 0.7, and December 1.4. So not only are the odds getting stronger each month that we're going to see outperformance, but the outperformance itself tends to grow each month into year end. So that was one area that I think wanted to point out, wanted you to keep an eye on as we go into the fourth quarter, I think this is an area that could produce some nice winners. Also, airlines. So airlines, if you notice, on Tuesday went down and tested their 50-day moving average. And since bottoming back in April and moving back above the 50-day moving average, you can see we've now had 3 successful tests of the 50-day moving average. In the prior 2, after the prior 2 tests, we have exploded to the upside. Now, I don't know if we're going to explode to the upside this time, but we did have a nice day today. And it's worth noting, seasonally, the airlines love September through February. If you can break down airlines, between bullish and bearish periods during the year, you would first start out, and this is one of the most amazing seasonal stats that I believe is out there. But over the last 13 years, from September to February, I believe the airlines outperformed the S&P 500 over those 6 months on average by 23% over the last 13 years, 23% per year. And then if you look at March to August, you'll see almost every month underperforms. August is the only month that's flat. Every other month underperforms. And from September to February, every single month outperforms except a very slight underperformance, average underperformance in December. So we are going into the very strong seasonal period. We're already in the very strong seasonal period for airlines, and we're coming off of this successful 50-day test. So I wanted to point that area out. The last area I wanted to point out is the banking area. This is a group that I have talked about over and over and over again, not just in 2025, but I loved this group in 2024 as well, because I did expect rates to come down, and rate cuts normally will benefit banks. I audited banks when I was in public accounting. I have a pretty good background fundamentally in that area. I think I'm certainly a voice worth listening to when it comes to banks. I think this could be one of the stronger areas of the market over the next 3 months. So we got our first close today on the Dow Jones US Banks Index above 780, first one in history. That was good on the heels of this rate cut. But again, I want you to look at the seasonal performance of banks over the last 13 years. If you look down here at the bottom, the average outperformance of banks over the S&P 500, add up October, November, and December, it's more than 5% outperformance. If you go to any other calendar quarter, first quarter is minus 3.7. Second quarter is minus 1.1. Third quarter is minus 0.4. The fourth quarter is plus 5.1. We are getting ready to head into the most bullish historical season for banks, and we're doing it with great fundamentals, with rates coming down and the group just now breaking to another all-time high. So these are areas of the market that I would really be paying attention to as we move forward. For those of you that are new to EarningsBeats, if you like what we do at EarningsBeats, go over to EarningsBeats.com. You can sign up for a free, no-cost trial to our paid service. You will be required to provide a credit card, but we'll let you know before the end of your trial period that you're going to be charged. But come over and check out what we do at EarningsBeats. I think you'll really like it. We have an extremely high satisfaction rate among our members. If you scroll down, if you just want to learn more about what we do, maybe get a little bit more of our insights, subscribe to our free EarningsBeats Digest newsletter, name, email address, all it takes, and we'll make sure we start sending out that EB Digest newsletter to you every Monday and Wednesday morning. I wanted to just give you a sample of what we've done the last 2 digest articles. So on Monday morning, I provided Applied Materials as a stock that I think has a chance to go up considerably. The last 3 days since this article went out, the stock's been up $10. So it's been up probably about 6-7% in just the last 3 days. If we go and we look at the weekly chart, I'll show you what I like here. So coming off of this high in the middle part of 2024, this is a weekly chart. Notice we come down, we print this low, which I believe is the left shoulder. We rallied back into the left side of the neckline. We came back down to a reverse head or an inverse head, back up, right side of the neckline, into the right shoulder, and now we're turning back up. A breakout above 200 would clear the neckline, and that would actually measure up to about 275, which would put Applied Materials at an all-time high. We're currently at 178, so there's a lot of potential upside. Like I said, we gave that one out back on Monday morning. The one that we gave out on Wednesday morning was PagSeguro Digital. This is a stock, if you look, we had a quad top coming across here, double top from April and May, another top in June, and then again just recently, earlier in September. 4 tops at about $9.75 to $10. We cleared all that on Tuesday morning. I think this is a stock potentially that could have a lot further upside after that breakout. Any kind of a pullback down closer to 10, something like that, I think would be potentially an opportunity in the stock. So those are just 2 examples. So make sure that you go in and you check out our EarningsBeats Digest newsletter. Subscribe. Again, it's completely free. We literally have tens of thousands of folks that have joined us. Why not? It is a free newsletter, and there are some potential trading opportunities that we talk about. All right, last thing I want to do. First of all, StockCharts has some awesome tools on their website. One that I really like, if you just want to find something really quickly that's starting to show some relative strength, what you can do is you can come into the scooter report area. And right now I'm just looking under large stocks, but let me show you how you get here. So if you go under the dashboard and under member tools over here to the left, scroll down until you get down to these research tools. Under here, you'll see SCTR reports. That's scooter. It's an acronym for StockCharts Technical Rank. So it's just a mechanical, formula-driven way to compare stocks within one asset class to other stocks within that same asset class. So if you click on this report, it'll bring you to what I was just looking at here. A lot of different ways to look. You can see stocks that have the highest scooter scores. So these are going to be stocks that have been performing exceptionally well of late. One thing I like to do is to look at the change in the scooter score. I want to find the ones that where the scooters is starting to jump pretty rapidly. And then maybe even go back and look over the course of the last week. So here's the top changes in the scooter for the last week among large cap stocks. Now, I went through here. I did this going through large cap, mid cap, small cap for both 1 week changes and daily changes. I'm going to start with CoreWeave because I pulled out the ones that I really like. I'm going to give you 10 stocks that I believe could be setting up for really big moves going forward. So CoreWeave is one that recently broke down below some key support at about the 105 area, and then tried to come back up, failed at the 20-day, failed at 105. Came back up again, failed at the 20-day, got to about 104. But then we gapped up and we cleared that key resistance area and then went back down, tested the 20-day from above, also tested that 105 area, and then rebounded. This is a stock that has been a very, very fast mover. I could see it making another run back toward the highs we saw just a few months ago up near 190. I'm not, guaranteeing that kind of a move. I'm just saying, hey, things have changed on the chart. Technically, it's looking much more bullish. I think these pullbacks to the rising 20-day moving average could present some nice trading opportunities. Next stock, GDS Holdings. Notice we had highs over here at about 40, 41. We had high here at 39 and change, another high here at 39, another high at 39. Look at what happened on Wednesday. We had this push back up. We cleared $40 on the close. You can see the AD line starting to soar. Relative strength at about a 6-month high. Volume coming in on this move. I think this could be the start of a move that perhaps challenges that high that we saw about 7 or 8 months ago earlier in 2025 back in February. And that high was up at about the 52, 53 level. Third stock. This is VNET Group. 21 VNET Group. Look at the reaction high here to about $9, a little over 9. Same thing at the end of August. And now September, we make the breakout. Look at the volume coming in. I like the fact that this AD line is starting to turn up. What I would like to do to get further confirmation is to see the AD line take out that July high. And then also I'd like to see the relative strength continue and move to about a 5-6 month high. I think that combined with this breakout and the fact that it's in one of the strongest areas of the market, internet stocks. If I go down here, look at what internet right now is doing relative to the S&P 500. Very, very, very strong group. And this stock is starting to show leadership qualities, a lot of volume coming in, making this breakout. I would be watching that rising 20-day as support. Stock number 4. This is PDD Holdings. AD line starting to turn up. Look at all these tops coming across here. We had gap resistance where we were trying to get through about 132.5. We failed on 1, 2, 3, 4, 5, 6 occasions until Wednesday. We gapped up. We closed at 135. We cleared resistance. Look at the volume coming in. Again, I think this is one that has a shot to quickly maybe go up and test the high near that 155 level from almost a year ago. Next, KE Holdings, BEKE. This one's a little bit more subtle. The AD line's been weak, so it's got some issues. But I love the fact that this stock had been struggling to get above about 20.25 on a closing basis. Today we did it. We opened above, kind of a high wave candle where we got a little indecision, a doji printed. So we opened and closed almost exactly at the same level. So there's a little bit of indecision here, but we did make the breakout. And again, if we go down here and take a look, it's part of the internet space. If it was part of a weak group, then I would probably not give it the time of day. But it is part of a really strong group. The AD line is weak. The relative strength relative to internet stocks, its peers are doing much better than this stock, but we just made this multi-month breakout. So this one is one that I think could potentially run next level 22. After that, 2450. I'd watch those couple of levels. I think we're going to make a run to test those areas. Next up, KC. This is Kingsoft Cloud Holdings. This one, if you look at it, you had these moves up to about $16 on a couple of occasions. But now we finally made this break above 16. We've been holding that rising 20-day moving average on any weakness. AD line is strong. We're getting strength now in terms of relative strength. Volume trends are supporting this move. I think KC goes higher. 22 would be my initial target on KC. All right, next stock, Vita Coco Company. Now, this is a food supply or food company, so might not be exactly the most exciting stock in the world, but we did struggle on a couple of occasions to get through resistance from about 39.5 to 40.5. And we finally made that move. AD line breaking to new highs. One of the strongest stocks in the food products area. That group, obviously being a defensive group, has not been performing well, but I love the volume trends. I love the relative strength. I like this breakout. I think you probably can hold out and try to see if you can get this stock a little bit cheaper, maybe around 40, 45. Or excuse me, 40 or 40, 50. But I think from maybe a little bit more conservative perspective, this might be one of the trades that you might like if, some of the others might seem a little too aggressive. Braze, software company, AD line's been strengthening the last couple of months. I think the downtrend has ended. I really like that gap up with massive volume. That came on the heels of a very strong earnings report. We did pull back initially. I think that $30 level provides great support. We were trying to make the breakout today. I think it's coming. I would not be surprised to see Braze actually go on an extended run and challenge the highs that we saw all the way back in January, which was near $48. And we're sitting right now near 32. So that would be another 50% upside from here. NCNO, this is nCino Inc. Another one that gapped up. This one's pulled back to the 20-day moving average, which I really like here after that breakout on big volume. This is a stock that's in the software space that just recently on that gap up with big volume right there moved to about a 5-month relative high versus software. I think this pullback to the 20 days an opportunity. I think we're going to go back up, challenge those recent highs, and eventually break out. Next up, Vipshop Holdings, Vips. This is the last one that I have for you. AD line is soaring. Price action is soaring. Volume trends are solid. Relative strength, we're now at about a 5-6 month relative high. And the daily chart doesn't do this stock justice. I want to show you the weekly chart where we had been struggling to get through about $18 for the last 2 or 3 years. So we are now with the action that we saw on Wednesday where we closed. That is the highest close that this stock has seen since back in mid 2021. So I really like what's going on here. That weekly PPO strengthening, maybe a little bit overbought in the near term, but any kind of a pullback, I think even probably close to that 18 level would make a lot of sense. Or as it gets closer to that 20-day moving average, I think makes a lot of sense, especially given the look of that long-term chart. Okay, that is it for me for today. Again, I want to thank everybody. Really appreciate you stopping by, checking out the video. I'm excited about the market going into year end. I really am. I've been talking about the fact that I thought the Fed would start to cut rates again. I think this is going to set the market up beautifully in the fourth quarter. I just think in the near term, we do have to respect history, the tendencies that are out there. We need to respect option expiration Friday, which is coming up. Prices can struggle in the week following option expiration. So I think, from now to the end of next week, I think we've got to be a little careful, kind of, keep our radar up, maybe use any pullbacks as opportunities to start building positions in stocks and areas of the market that we like. But that's all I got for today. I'll see you next week. Happy trading, everybody.